Good
Am I
morning, sir.
audible?
Yes, sir, you're audible.
Yes. No. Can I get some response?
Yes, sir, you're audible.
Audible? Okay, perfect.
Yes.
Let's get started with today's session. So what are we planning to discuss in today's session? Most of you seem like you might have just come from your school, colleges, blah, 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 blah. I don't really care. 1 hour that we spend together, let's ensure that we get closer to a dream called chartered accountancy. That's the only objective that we have for the next 1 hour. All right. So what we are going to do is quickly look into the chapter called Negotiable Instruments Act. All right. Important chapter from exam perspective, very critical, because you will get definitely a lot of questions in accounts as well, along with law. I hope you realize in accounts there is a separate chapter called Negotiable Instruments. Am I audible? Is it there? Not there? Not aware?
Yes, sir.
Sir.
Yes, sir.
Can we begin? Yes.
Yes, sir.
Yes, sir.
Yes, sir.
Wrong with the energy. I'll need a little energy for all my friends who are just about to crash. Can you sit straight? Everyone, those of you who need support of your hands, I think you have a decent spine and you can take support. Let's begin with today's session. Everyone with me?
Sir.
Negotiable Instruments Act is one small chapter, but at the same time, it's an important chapter because a lot of questions come from here. All right. So you can expect easily around 10 marks from this chapter, bare minimum 10 marks from this chapter. I'm talking about 10 marks in your examination. So it is a good important chunk. So you have to be aware of it. Let me know if you can see the screen and let's get started. Keep your notes open. All right. We are going to look at it as and when there is any particular topic coming in from this topic. Yes. Can I begin?
Yes, sir.
Yes, sir.
Yes, sir.
All right. So keep your notes open. Keep your revision material which has been circulated, keep it open so that I can quickly take you through all those pointers, and we begin with negotiable instruments. I hope the screen is visible to everyone. Not yet?
No, sir.
Not yet, sir.
Not yet? Okay, perfect. I haven't shared yet then. Is it visible now?
No, sir.
No, sir.
Not yet? Not yet?
No, sir.
Okay, okay. Don't worry. Just allow me a second, friends. Okay. So let's continue. Let's continue with the chapter. Keep your material open. Quickly, let's get started with the definition of negotiable instrument. Now, what is this negotiable instrument? Negotiable instrument as a topic is to tell what exactly when I can use a document for the purpose of transferring from one person to another person. Everyone with me? All right. So whenever I want to transfer money or money's worth from one person to another person, I use the word negotiable. Now, what is this negotiable instrument? Negotiable instrument is defined under the negotiable instrument to act an act which covers only three things: promissory note, or rather bill of exchange first, promissory note, check, full stop. Am I clear, everyone? Slap yourself if you say yes, because after this, what is important is coming in the definition: payable either to the bearer or to the order of the instrument. Very, very important phrase. Your entire definition is incomplete if you do not write this pointer. Are you clear, everyone? Hosanna there? All right. So what are we talking about? We are talking about definition of negotiable instrument. Negotiable instrument means, listen to me very carefully. Negotiable instrument means any document which is capturing any of the following three things. What are those three things? Either it can be a bill of exchange, promissory note, check, payable either to the bearer or to the order of the instrument. Clear, everyone? Understood? All right. So where is this definition coming from? This definition is coming from section 13. Everyone with me? All right. Then we go one step ahead to understand what are the conditions for calling any document as a negotiable instrument. All right. Or the conditions for negotiability. There are three important transactions or three important conditions. First one, it should be for a value. All right. It should be for money or money's worth. It cannot be open-ended. It has to include money or it should be for a value and there has to be a consideration for it. Second, this instrument should be very, very critical for good faith. All right. This instrument has to be taken or given in good faith. Only then you will get a valid title in it, or else you will not get a valid title in it. Clear, everyone? Understanding the point? All right. So these two important conditions, and the third one, very, very critical, freely transferable by one person to another person. Until and unless the third condition is satisfied, it is not a negotiable instrument. Clear, everyone? Understood my point? All right. So that is about your negotiable instrument definition. Then we went on to understand what exactly is the definition of the word bill of exchange. What is the definition of bill of exchange? If you see, the definition is very simple. It is any document. All right. Listen to me very carefully, guys. Just allow me a second. Just allow me a second. You guys have your material with you?
Yes, sir.
Is the revision material available with each one of you? Yes, no. Can I get some response, please?
We have the old one, sir, like last batch.
Last.
You, the new batch students, do you have the material with you? Yes, no.
No,
Guys, you'll have to give me response. I will not understand unless
no,
I
sir.
yes, sir.
Yes.
There is no material available, right? Then don't worry. Anyway, what I am going to explain is not coming from any new material. It is going to be a part and parcel of your existing CAPS material itself. Now, who has prepared this material? I have only prepared this material. So you don't have to worry about anything. I have myself designed this in a way that your CAPS material is very much getting covered. What I will be doing is I will be summarizing the entire chapter once for all for ease of reference for everyone to understand the concepts well. Simple as that. Can I begin? Yes. So that was about the definition of negotiable instrument. I am also opening the PDF easily so that we can discuss it in length. All right. Just allow me a second. Is it visible now to everyone?
No, sir.
No, sir.
Say yes for the sake of it. All right. Perfect. I haven't shared the screen yet.
No.
I have not shared the screen yet. All right. I'm just opening the document. Just allow me a second. It's visible now. Let's get started. So the first point that we have already spoken about is promissory note, bill of exchange, and check. Definition of each of these. What is the difference between promissory note and bill of exchange? You have to understand. In promissory note, there is an unconditional undertaking. Are you understanding, everyone there? All right. In case of bill of exchange, there is an unconditional order. In bill of exchange, I am ordering you to make certain payment. All right. To whom? It will be paid either to the bearer or to the order of the instrument. Simple. All right. This is in case of bill of exchange. In case of promissory note, I am making an unconditional undertaking. I'm making an unconditional promise to you that I will make certain payment. To whom will I make the payment? I will make the payment to whomever you say, all right, or I will make it to the bearer of the instrument. Whoever has the instrument will be the person who will receive it, or to whosoever order you are asking me to make the payment, I will make the payment to them. Very critical that you have to understand. Promissory note categorically excludes two items. What are those? Banking note, currency note. All right. So if you recall during the session itself, we've understood what is a banking note, what is a currency note, what is the difference between a banking note and currency note. Those notes which are issued by the RBI will be called as the banking notes. Those notes which are issued by the Reserve Bank of India are called, I'm sorry, those notes which are issued by the RBI will be called as the banking notes. Those which are issued by the government of India will be called as the currency note. Clear? 1 rupee note issued by government of India. Do you remember? We have discussed this during our sessions itself. All right. So that is about your banking note, currency note, which are excluded from the definition of promissory note. Now we go one step ahead to understand the definition or the meaning of the word check. Now, what is check? Sit straight, everyone. All right. Check is also a bill of exchange itself, which is going to be payable only if you demand. If you don't demand, do you think the banker is going to knock your door and ask you, sir, do you want money? Answer is no. You have to go to the banker. You have to demand. All right. So it is payable only when demanded. Interestingly, this also covers two important items. It also includes a truncated check and an electronic image. All right. So what is an electronic form of check? Electronic form of check is nothing but the same check which you see. It is an electronic form. Second thing, truncated check is a copy of the check which one banker is sending to another banker for clearing. Do you remember we had discussed whenever clearing has to be carried out, earlier we all used to meet in person and carry out the clearing. Now all that is not required. You take a copy of it, send it to the other banker. Banker will send his copy to you, net it off, and finally whatever is the payable receivable, that will be settled. This is called truncated check. So check includes even truncated check within its meaning. Clear, everyone understood the point? All right. Then we went on to understand what exactly is the concept of three words: holder, holder in due course. All right. And a very, very critical item, which we will discuss later on. First, who is a holder? Open your books. Start. Read. What is a holder? Who is a holder? Section 8. Start. Quick. Am I audible to everyone?
Sir.
Yes. Read. One of you. Who is a holder?
The holder of a promissory note, bill of exchange or check means any person entitled, first one, in his own name to the possession thereof. That is, he must be named in the instrument as payee or endorsee, or he must be the bearer of instrument. And second one, to receive or recover the amount due thereon from the parties thereto. Where the note, bill of exchange is lost or destroyed, its holder is the person so entitled at the time of such loss or destruction.
Simple, everyone understood the point. All right. For those of you who haven't understood, I repeat. Sir, who is the holder? Stop. Lot of you are fidgeting with your books. I don't even think most of you have opened Negotiable Instruments Act and read. All right. It's visible. You guys are searching where this entire chapter is, whether this has been discussed or not. Nevertheless, holder in due course and holder is defined in section 8. All right. Sati, what is section 8 saying? Section 8 says holder means any person who in his own name is entitled to receive the money. All right. That person will be called as a holder. Who is a holder in due course? Holder in due course is a holder. First item which you have to understand, holder in due course is a holder who is entitled to receive the money and he has taken the instrument in good faith. Are you understanding? The word good faith is extremely critical in the definition of holder in due course. Who is the holder? Holder means a person who is in his own name is entitled to receive the money. Everyone on screen. All right. Tomorrow, if that instrument is lost, let's suppose I gave it to Sachi. Sachi there? Sachi lost the instrument. Congratulations. She's saying yes. Now, in this situation, she's gone ahead and lost the instrument. Who is the final holder? Who's the person who's going to be entitled to receive the money? Whoever lost it at the time when it was lost, who was holding it? That person will be called the holder. Are you understanding, everyone? Now, why is it necessary, sir? Why should I know who is the holder? Only if you're a holder, you will receive the money. If you're not the holder, why will you receive the money? Are you understanding, everyone with me? All right, let me give you an example. Let's suppose I've given you a promissory note. I promise I will make the payment to you. With me, everyone? You've lost that promissory note. Now, you will file an FIR, you will file a copy, you will go ahead, complain, try getting a duplicate. Are you with me? Now, the question is, why will the police agree to issue another promissory note to you itself? How will I know that it was you? At the time when the instrument was lost, who was holding it? That person will be called the holder. Thereafter, we will investigate whether you were there at that time or not. If yes, then you will be the person entitled to receive the money. Are you understanding why the holder concept is necessary? All right, Samriddhi, read it once again. The definition of holder.
Holder, section 8, the holder of a promissory note, bill of exchange or check means any person entitled, first one, in his own name to the possession thereof. That is, he must be named in the instrument as payee or endorsee, or he must be the bearer of the instrument. And second, to receive or recover the amount due thereon from the parties thereto. where the
Are you
note
understanding,
bill of
everyone?
exchange.
All right. Two important things. One, if your name is already recipient, you are the person who is supposed to receive the money, then you are the pay. You are the endorsee. I would have endorsed it to you. All right. So you are the endorsee who's supposed to receive the money. In this case, you're the holder. Clear? Everyone understood the concept? The person where the note, bill, or check is lost or destroyed, its holder is the person so entitled at the time when it was lost. When you lost it, at that time, who was the holder? That person will be the person who is entitled to receive the money as well. Sleepy?
No, sir.
No, sir.
No, sir.
First of all, I don't take a session in the evening. All right. For the first time, the rarest of times I take on a weekday evenings. Looking at your faces, looking at the number of participants itself, I am scared. All right. Upon that, your energetic faces are pushing me a little more. Can I continue? Everyone with me? I am revising, by the way. I'm not teaching anything new. Looking at your faces seems like we are talking about it for the first time. We have discussed this, right? We have discussed negotiable instruments.
Yes, sir.
Yes, sir.
Yes, sir.
And what session is this?
Revision.
Revision session.
A revision. First vision was already done. We are revising it. I hope I'm clear, everyone. So stop acting as if you're listening to all this for the first time and pay a little more attention on the details. Second topic, holder in due course. Dhriti, holder in due course means any person who has become the holder of the instrument for a consideration. All right. Very, very important language is he does not have any sufficient cause to believe that there is a defect in the title. That means he has received it in good faith. He has taken that instrument in good faith. There may be a defect. Somebody might have stolen it. Somebody might have given it to you. Something might be defective in the title. But the moment you have received it, you are going to be the valid owner of it. What example did we take during our classes? We had taken some example for this, right?
Spider-Man.
Spider-Man and Superman.
Abhimanyu. For those of you who don't know Indian mythology, for you guys, I had given another example of Superman, Spider-Man, Batman. Do you remember? The moment the instrument passes through Spider-Man, if I'm not wrong, all right, all the defects are removed. So there was a Superman, there was a Spider-Man, there was a Batman. All right. The moment the instrument passes through a Spider-Man, all the defects are removed. There's only one thing which a Spider-Man or Abhimanyu cannot do, that is remove one defect. Which defect is it?
Forgery.
Are you
Forgery.
happy, guys? I'm not sure how many of you are able to realize that I'm not sure. Many of you might not even bothered reading this chapter ever, but still, I am glad that you are able to recall. All right. This is the beauty. This is the only reason why we would have taken certain examples. Let's continue. All right. The second thing is benefits of being a holder in due course. Now, sir, I am that Abhimanyu. I am that Spider-Man. Now what? You will enjoy a privileged position. Why? Because the moment the information passes through you, the moment the instrument passes through you, all the defects are removed. Clear, everyone? Except for one defect, which is forgery. Second important thing, Lahiri, if a holder in due course can go ahead and recover money from all the previous parties. Why? Because he has taken it in good faith. He does not have any reason to believe why there is a defect in the title. Are you understanding, everyone with me? So this is the benefit of being a holder in due course. Now, there are a couple of case studies which are there in your study material. I want you to go through those case studies. All right. I hope you realize this is a revision. So let us keep it like a revision itself. I'm not going to get into detailed work of each and every aspect, but I'm telling you whatever is relevant and important as and when I'm discussing. Close all your books. Can I continue now? Close all your books. Can I continue? All right, focus.
Yes, sir.
The next thing is types of negotiable instrument. Now, negotiable instrument can be different types. It's the same concept, but we are seeing it from different angles. It's as good as who is Rama. It can be seen from somebody's brother perspective, somebody's husband perspective, somebody's son perspective, somebody's father perspective. Same person, seeing it from different angles. Same way, when it comes to negotiable instrument, it can be different types of negotiable instrument from different angles. First one is called bearer instrument or order instrument. Now, bearer instrument is like that voucher. Whoever has the voucher will enjoy the voucher. Clear, everyone? Understood? All right. What is order instrument? Whoever name has been written in the instrument, only that person will be entitled to receive the money or pay the amount. Nobody else will be able to receive or pay the amount. Are you understanding, everyone with me? All right. So this is your order instrument where certain person only will be acting upon it. If it is with you and if your name is not mentioned, are you entitled to it? Answer is no. Why? Because your name is not mentioned. So this is bearer and order instrument. Quickly read, one of you. Anyone?
Classification of negotiable instruments. Bearer instrument is an instrument. Okay. Is an sir. There is a view obstructing the screen, sir. Like there's
Now
a
is it
black.
visible?
Yes, sir.
Now.
Bearer instrument is an instrument where the name of the payee is blank or where the name of the payee is specified with the words or bearer or where the last endorsement is blank.
What do you mean by last endorsement is blank? Last endorsement is blank means they've not given, let's suppose I gave it to Samriddhi by mentioning it Samriddhi's name. Samriddhi has given it to Kiran, Kiran to Larry, Larry to Jeevan, Jeevan to Dhriti. Dhriti has not given any name. She has given it to Swadhi. All right. So the last endorsement which Dhriti has made it to Swadhi is blank endorsement, no name written. It is like voucher. Whoever has it enjoys it. Are you understanding? Everyone with me? All right. So this is a bearer instrument. Read next.
Yes, sir. Order instrument is an instrument which is payable to a person or payable to a person or his order or payable to order of a person or where the last endorsement is in full. Such instrument can be negotiated by endorsement and delivery.
Now, what is blank endorsement and full endorsement? Blank endorsement, I've already told you, name is missing. All right, full endorsement, I've specifically mentioned whose name, what is to be given, when it is to be given. All the details are captured. Order, whosever details are given, only that person will receive, nobody else will receive it. Are you understanding? This is exactly opposite of bearer instrument. Clear? Can I continue, guys? All right. So this is about order and bearer instrument. Now, the second category is inland instrument and foreign instrument. Gangotri, inland instrument is any instrument which is made in India, payable in India, drawn on a person resident in India. If all the three conditions, Akshay, are satisfied, only then it will be called as an inland instrument. If any one is missing, it's a foreign instrument. Do you recall? We've discussed this. All right. If all the three are there, Pooja, only then it is going to be considered as an inland instrument. If any of this is missing, Jeevan, then it will be considered as a foreign instrument. Crystal clear with the concept. Can I continue? Shravan there. All right. The next consideration is, I think two more types are there, which is missing here. All right. It's covered here. Ambiguous instrument and incoherent instrument. Now, what is ambiguous instrument? The word itself says ambiguous, ambiguity, confusion, like us. All right, forever. Now, the point is ambiguous is I am not able to determine whether it has to be treated as a bill of exchange or a promissory note. Now, that confusion, all right, will be resolved by the person who has gone ahead and finally whoever is holding it. Are you understanding, everyone with me? All right, such instrument will be called ambiguous instrument. What is incoherent instrument? Incoherent instrument is incomplete instrument. Something is missing in it. All right. What is missing? It could be name, it could be amount, it could be something else. All right. Those instruments are called incoherent instrument. Crystal clear, everyone? Read, one of you.
Ambiguous instrument, section 17, where an instrument may be construed either as a promissory note or as a bill of exchange, the holder may, at his option, holder may, at his option, treat it as either, and the instrument shall be henceforward treated accordingly. That is, an ambiguous instrument treated as a bill of exchange or note cannot be treated differently afterwards. Example, a bill drawn by a person on himself in favor of a third person or where the drawee is a fictitious person.
All right. This is section 17, which says where an instrument, whether I am confused whether it has to be treated as an promissory note or a bill of exchange. Now, in this case, what should I do? Whatever is the holder treating it once, let's suppose I have decided it has to be treated as a bill of exchange. That means it's an order. You have to make the payment. Whatever I treat it, finally, it will be treated as that itself for all the continuous purposes thereafter. Understood, everyone? This is your ambiguous instrument. For those of you who are not able to recall the discussion, all right, I had given this example during our classes. All right, let's suppose Lakshana has given it to Chinmay. Chinmay has given it to Akshay. Akshay has given it to Mehul. Mehul has once again given it to Lakshana. Now, when Lakshana gave it, it was a promissory note. Lakshana promised that I will make the payment to Chinmay. Chinmay has endorsed it to Akshay. That means on the due date, Usha, Lakshana will come and make the payment to Akshay. Akshay has given it to Mehul. Now, on the due date, Lakshana should ideally come and give it to Mehul. Are you understanding, everyone? What I did before it is due, before the due date itself, I have gone ahead and given it to once again Lakshana. Let's suppose I had to make some payment to Lakshana, so I have given it to her itself. Now, will Lakshana make the payment to herself?
No.
Ambiguous. What should I treat it? As a promissory note or a bill of exchange? Is it a promise or it is an order? What should you treat it? All right. It is left to Lakshana. You decide how do you want to treat it. As a promissory note or a bill of exchange, you decide. Once you decide, it will be treated accordingly forever thereafter. Are you understanding? This is ambiguous notice or instrument. Incoherent, something is missing in it. Read, one of you. Incoherent instrument. Quick. We're running short of time, huh?
Yes, sir. Incomplete or incoherent instrument, section 20, where one person signs and delivers to another a paper stamped in accordance with the law relating to negotiable instruments then in force in India and either wholly blank or having written thereon an incomplete negotiable instrument. He thereby gives prima facie authority to the holder thereof to make or complete, as the case may be, upon it a negotiable instrument for any amount specified therein and not exceeding the amount covered by the stamp. The person so signing shall be liable upon such instrument in the capacity in which he signed the same to hold to any holder in due course for such amount.
Let's suppose you cleared CA Foundation. All right. Out of happiness, I won't give. Sandhya madam has given a check to you. There, everyone. All right. She has gone to the extent, golden hearted. She has given you a blank check. You fill the amount. How many ever zeros you want to put, you put. Incoherent instrument, incomplete instrument. Whatever amount you think, you put, and that instrument will get cleared. Are you understanding, everyone? All right. Now, very important. There is one very interesting condition which they have mentioned about stamping. Now, what is stamping? Stamp duty is the bare minimum amount which you would have paid for transfer of money. All right. When you have cleared CA Foundation, Sandhya madam is giving you this entire instrument. All right. She's making a payment to you. She's gifting you. It does not happen free of cost. You have to pay something called as stamp duty. Stamp duty is something called as a chiller given to government. Are you with me? Everyone understanding? All right. So it's a small tax which you give it to the government. Now, this varies based on amount. For 1 lakh, it might be 100 rupees. For 10 lakhs, it might be 1,000 rupees. So it varies from one amount to another amount. So let's suppose if she has paid a stamp duty of 1 lakh, how much is the amount that you can write in the check? Up to 1 lakh rupees. Simple as that. Can you write 1 crore in that? Answer is no. She's already paid stamp duty of 100 rupees. So you can mention up to the amount which has been given under the stamp. You cannot go beyond that. Did you understand the meaning of the word stamping there? Everyone? Clear?
Yes, sir.
Yes, sir.
Yes, sir.
Yes.
Can I continue? All right.
Yes, sir.
So this is about your incoherent instrument and ambiguous instrument. Going ahead with the next. Negotiation happens by two ways. All right. One is negotiation by delivery. The other one is endorsement. Listen to me very carefully. All right. Negotiation can happen by delivery or the other one can be by endorsement. So what is this now? Where I have issued the instrument to you, you have got the delivery of it. The negotiation, the instrument will become valid only after it is delivered to you. Are you understanding, everyone? All right. So this is where negotiation is happening by delivery. I have given it to you. Full stop. Sachi. Focus, everyone. All right. Close all your books. Quick. Close all your books. Now, going ahead with the next point. Now, let's suppose I have given it to you. You have endorsed it to somebody else. That is negotiation by endorsement. Are you understanding, everyone? All right. So here, first limb was delivery, second limb is endorsement. This is called as negotiation by delivery and negotiation by endorsement. If it is a bearer instrument, then there will be delivery as well as endorsement. Are you understanding? Why it's a blank check? It's an instrument without name. Whoever has the instrument will enjoy it. So it can either be by delivery or it can be by endorsement. Are you understanding, everyone there with me? So let's suppose it's an open-ended instrument without any name. I have given it to Shravan. Shravan has gone ahead and given it to Dhanush. All right. So first I had delivered it, then he has endorsed it. So whenever there is a bearer instrument, there is negotiation by endorsement coming into picture. If it is an order instrument, can there be endorsement? How will you endorse? I have given it to Shravan. I have categorically mentioned only Shravan will receive the money. Now Shravan has given it to Dhanush. Will Dhanush receive the money?
No,
Will
sir.
Dhanush receive the money? Answer is no, Dhanush will not receive the money. Why? It's an order instrument. Let anybody under the sky hold that instrument. It's of no value because finally I will make the payment only to Shravan. I will not make the payment to anyone else. This is negotiation by delivery. Are you understanding? All right. Endorsement comes into picture if it is a bearer instrument. If it is an order instrument, it is always negotiation by delivery. Crystal clear with the concept, everyone. Understood the point? Very simple, very obvious points these are. All right. Now, let's go ahead one by one. Quickly, let us read negotiation by delivery and negotiation by endorsement. Read, quick. Anyone?
Section 47, negotiation by delivery. A promissory note, bill of exchange, or check payable to bearer is negotiable by bearer thereof. Exception: a promissory note, bill of exchange, or check delivered on condition that it is not to take effect except in a certain event is not negotiable, except in the hands of a holder for value without notice of the condition, unless such event happens. Example: discuss two scenarios where a negotiable instrument payable to bearer changes hands. First one, number one, delivery to agent, where the holder of a bearer instrument gives it to someone else's agent for safekeeping. It's considered negotiated and the principal becomes the holder.
In simple terms. So what are we talking about? Where negotiation is by delivery. All right. That means it is payable to whoever has the instrument will be the person who will enjoy it. Are you understanding, everyone with me? All right. So where negotiation is by delivery, there are whoever has the instrument will be the person entitled in the instrument. Now you have to understand two exceptions where even though the instrument might be in your hand, but the person enjoying it will be somebody else. Example, agent. You are Shetty sir's agent. Let's suppose I give the instrument to you, but finally, who will receive the money? Will you receive the money or Shetty sir will receive the money?
Shetty sir.
Shetty sir.
Shetty sir, all right. You are merely holding it, but at the end of the day, the person receiving the money will be somebody else. So this is a situation. This is an exception where, all right, negotiable instrument is payable to the bearer, changes hands. In simple terms, even though you're holding the instrument, but the payment will be made to somebody else. This is a situation where even though you're holding it, but the payment will go to someone else. Clear? Everyone understood the point? All right. Second situation, bank transfers. When a holder directs their banks to transfer the bearer instrument to B's account, it is considered negotiated and B becomes the holder, which is also the bank of another person. Didn't understand? I'll explain it to you. I have my money in Axis Bank, suppose. All right, Samriddhi. Now, in this case, I have my money in Axis Bank. I'm ordering Axis Bank to make the payment to Mr. B. B does not have any account in Axis Bank. He has an account in State Bank of India. Now, if you were to think logically, instrument might be in the hands of B, but the payment is being made by the bank to another bank. B is not receiving the money. So what are we talking about, guys? We are talking about situations where the instrument, whoever is holding the instrument will be the person who will receive the money. Correct? These are two exceptions where even though you're holding the instrument, money will be received by somebody else. Are you understanding? All right. These are two scenarios where you're holding the instrument, but money is received by somebody else. This is negotiation by delivery. Crystal clear with the concept. Everyone understood the point. All right. Let's go ahead with the next topic, which is negotiation by endorsement. Where any instrument is payable by the holder by endorsement and delivery thereof. In simple terms, I've already explained endorsement means endorsement and endorsement are one and the same. Don't get confused, Sanjana. All right. I have given it to you. So that becomes delivery. Thereafter, you give it to Hosanna. So that becomes endorsement. Whoever is finally holding it will get the money. Simple as that. No confusion at all. Clear hai? Can I continue?
Yes, sir.
Yes, sir.
Yes, sir.
All right. We've written a test on negotiable instruments, right?
Yes, sir.
Yes, sir.
Looking at your faces, I'm scared a little. Huh? Now, is delivery necessary? Is delivery necessary?
Yes, sir.
Yes, sir.
100%. If you recall, in negotiable instrument, one of the basic requirements itself is delivery. I am going ahead and issuing a check of 10 crore rupees to you, but kept it in my drawer. You receive the money, enjoy. Nonsense. Does it even make sense? I've kept it in my drawer. Have I delivered it? Answer is no. Until and unless it is delivered, there is no question of payment coming into picture. There is no question of any liability coming into picture. Are you understanding, everyone with me? All right. Naveen, I've gone ahead, issued. I've told you that I will give you 10 crores. But that money, that check is lying in my drawer. I haven't given it to you at all. That check will be payable only if I give it to you, right? If I keep it in my drawer, is it delivery? Answer is no, it is not delivery. So is delivery necessary in case of bills of exchange? 100% yes, delivery is necessary in case of bills of exchange. Read, one of you. Anyone?
Section 46, Importance of Delivery. The making, acceptance, or endorsement of a promissory note, bill of exchange, or check is completed by delivery, actual or constructive. As between parties standing in immediate relation, delivery to be effectual must be made by the party making, accepting, or endorsing the instrument, or by a person authorized by him in that behalf. As between such parties and any holder of the instrument other than a holder in due course, it may be shown that the instrument was delivered conditionally or for a special purpose only, and not for the purpose of transferring absolutely the property therein.
Sir, we didn't understand head and tail of what our friend just said. In simple terms, I'll explain. Sit straight, sit straight. All right. Sit straight. So, in a situation where ever there has to be any question of delivery, all right, if there is any, am I audible to everyone?
Yes, sir.
Yes. So we are talking
Yes.
about a situation where delivery has to be carried out, whether it is actual delivery or constructive delivery. What is constructive delivery? Already you might have learned in Sale of Goods Act, all right, which Rajiv sir has already discussed. If not, he will discuss. Don't worry about it. Now you have to understand, between you and me, when is it delivered? When I give it to you, when you have it in your hand, or else is it delivery when I keep it in my drawer? When is it delivered? Only when you receive it, correct? I have not given it to you, but I've given it to your agent. Is that okay? Is that delivery? I've not given it to you. I've given it to your agent. Is that delivery?
It's a constructive.
100% it is delivery. Why? Because either I give it to you or to any other person whom you have authorized. I am not authorized. All right. So in that case, either I give it to you or I give it to any other person whom you have authorized. Delivery. Second situation, all right, between parties and any holder other than holder in due course, it may be shown that the instrument was delivered conditionally or for special purposes only and not for transferring absolutely the property therein. Sir, what is this? Let's suppose I have to issue an instrument to you. All right. In that case, we know we have gone ahead. You and me, both of us have planned. All right. Some forgery or we've stolen this instrument. Are you with me? Everyone there with me? All right. Let's suppose it is with Shetty sir. And Shetty sir is holding that instrument. You and me have gone ahead and stolen it. And once I steal it, I give it to you. Now the question is, are you a holder in due course? Are you a holder in due course?
Yes.
Yes, sir.
100% no. You are already aware that I've stolen it. Have you taken it in good faith? When you already know that I've stolen it, have you taken it in good faith? Wow.
No,
Yes.
sir.
All Abhimanyu,
No,
Superman, Spider-Man we have
No.
learned, but we don't know how to identify if there is a holder in due course or not. Did you understand the point, everyone? Got the question? Everyone, are you a holder in due course when you know already that I have stolen it?
No, sir.
No, sir.
In that case, law says, all right, between the parties and the holder, it may be shown that the instrument was delivered for a condition. All right. In this case, I've stolen it from Shetty sir and I've given it to you by mentioning that, look, I've stolen it only for time being. If somebody is asking you whether you have money or not, just show this check that I have this money. All right. I'm supposed to receive this money of 10 crores, 20 crores from Shetty sir. I'm not going to deposit in the bank because the moment I deposit, there will be an FIR filed against me. All right. I will not deposit it. I will just hold it. It's for a special purpose. It's conditional. In that case, the moment I gave it to you, it is going to be considered as delivery. Again, this is not right. Reason being, it is conditional and no instrument should be passed on conditionally. It should be free from any conditions. It should be unconditional. Characteristics of negotiable instrument. Got the point, everyone? All right. So the second point is anyway an importance of delivery where we are trying to catch hold the person. So tomorrow, if somebody has to catch hold, whom will they catch hold? Me or you? To catch hold that person itself, we are seeing whether it was given or not, whether I gave it to you or not. In that case, we are seeing the delivery will be the moment I gave it to you, even though it is for a special purpose, even though it is conditional. The moment I gave it to you, it is conditional and it has been delivered. Tomorrow, if somebody catches, they'll catch you. Are you understanding, everyone? All right. That's exactly why we don't have the concept of conditional instruments. The first point itself in your caption material, when you were reading, you would have come across negotiable instruments must be unconditional. Because if it is conditional, then it is not right. Here, everyone understood the point? All right. This is about your importance of delivery. The next topic is check bounce, section 138. All right.
There's no
Sir,
such concept.
Such concept, sir.
Thank you. All right. Samriti, somewhere some faculty had taught, just like how you know partnership is a relationship. All right. Similar minor partner, just like somebody had taught. Same faculty had taught. The same faculty had taught check bounce as a concept does not exist.
Okay.
Check being returned due to insufficiency of funds. Section 138. Is there a penalty? Answer is yes. What is the penalty? When does it come in picture? We've learned this in detail. We'll revise this once for all again. Read, anyone. Section 138. Start.
Penalties in
Penalty
case of
in-
withdrawal of checks for insufficiency of funds, section 138, where any check drawn by a person on an account maintained by him with a banker for payment of any amount of money to another person from out of that amount for the discharge of any debt or other liability is returned by the bank unpaid, either because of A, amount of money standing to the credit of that account is insufficient to honor the check, or B, that exceeds the amount arranged to be paid from that account by an agreement made with that bank, such person shall be deemed to have committed an offence and punished shall be punished with imprisonment for a term which may be extended to 2 years, or with fine which may extend to twice the amount of check, or with both.
Did you understand? Two reasons. The check is being returned either because the amount that you've put in the check is more than your account balance itself. Insufficiency of fund. Second, I have sufficient funds, but there is an instruction which has been given that please do not make payment of more than 10 lakh rupees. Standing instruction. All right. I have money. I have issued a check of 1 crore, but I have an instruction that the instrument should not be honored if it is more than 10 lakh rupees. Do you have money in your bank account? Yes. But can you make the payment? Answer is no. Why? Because there is a standing instruction. So again, check is being returned. All right. Can I say because of insufficiency of funds? Answer is yes, because of standing instruction given that more than 10 lakh rupees, please don't make the payment. Now, in this case, law says what you've done is a wrong thing. I will punish you. How much is the penalty? It can be imprisonment or a fine or both. Now, who will decide that? The courts will decide that, whether it is imprisonment, whether it is penalty, or whether it is both. Here, everyone understood section 138. All right. That's about your section 138. Now, let's go ahead with the next topic. When will this not apply? All right. That means the penalty is not applicable until and unless the following three things are happening. That means only if these three things are happening, then the penalty will be levied. What are those three things? Let us quickly look at it. First one, all right, where the check has been presented within valid period. I have issued a check to you, 10 crore rupees. Everyone with me? All right, I have issued a check to you, 10 crore rupees. In my bank account, there is only 1 crore, suppose. Now, will the check be returned due to insufficiency of funds? Answer is yes. Can you file a case against me under section 138? Answer is yes, provided these three conditions are satisfied. What are those three conditions? Did you deposit the check within 3 months or not? First condition. Second condition, all right, when you realize that I have defaulted, when you got to know that I don't have sufficient funds, did you give a notice to me asking to make the payment? If you fail to give a notice, it's not my headache. You cannot file a case under section 138. You have to give a notice to me. Clear? Everyone understood? After giving the notice, also if I make the failure to make the payment, if I fail to make the payment, only then three conditions are satisfied. Now you can file a case against me under section 138. Clear? Everyone understood the point? So when can you file a case against me under section 138? Only if three things are satisfied. First thing, did you do your job correctly by depositing it within 3 months? Yes. Second, did you give me a notice that the check has got returned due to insufficiency of fund? Answer is yes. Third, after you give the notice, also I have not made the payment. Did that happen? Yes. After these three conditions are satisfied, only then you can file a case under section 138. Clear? Everyone sleepy? Continue.
Continue, sir.
Next, section 139, presumption in favor of the holder. It shall be presumed unless otherwise proven contrary that the holder of the check received the check referred to in section 138 for discharge of any of the debt. What is the meaning of this? Once you hold a check, it is assumed that you've got that check from me only because I had to make the payment to you. Will I randomly give you a check? Am I sitting here for donation? Am I running a charity organization here that randomly out of whims and fancies, happiness, so I'll give you a check? No. So this is the presumption that when you are holding a check, it is assumed that the other person was liable to make the payment to you. That's why he is issued a check, or else he wouldn't have issued a check. Are you understanding? All right. So there is a debt. That's why the other person has issued a check. Now you might be thinking, sir, why this presumption is there? Anyone? If it is a debt, what happens? Within 3 years, if you don't claim the money back, it becomes a time barred debt.
Debt.
Indian Contract Act, Rajdeep sir might have taught. That's why I'm categorizing it as debt first. Within 3 years, you have to claim. If you fail to claim it, it will become a time bar debt. This is the connection. Understanding everyone with me? All right. So that's why this presumption is necessary. Now going ahead, section 140. Defense which may not be allowed in any prosecution under section 138. Can I take an argument? It shall not be a defense in prosecution that the drawer had no reason to believe when he issued the check that the check may be dishonored for on presentment for the reason stated in that section. What is the meaning of this? Let me explain. I have issued a check to you, 10 crore rupees in my bank. There is only 1 crore. Can I say before the court, sir, I thought I will have 9 more crores in future, so I've issued 10 crores. Can I give that?
No.
If you are the judge, will you agree to it? That's what section 148 is saying. All right. You cannot give that as a defense. All right. That you had no reason to believe when you had issued the check that you will not have 10 crores. When you already know you have only 1 crore, why did you issue in a 10 crore check? Are you understanding everyone with me? So can I take an argument in the future before the court? Sir, I thought unconde. All right. Mujhe laga tha. Can I give this as an explanation in future?
No.
That's what section 140 is saying. This is not a defense. You cannot come up with this difference. Clear, everyone? Understood the point? All right. This is section 140. Now going ahead with the presentment. Presentment, I've told you there are two types of presentment. First one for acceptance. Second one for payment. Do you remember once upon a time, some faculty might have taught you guys. All right. Presentment, guys, able to recall?
Yes, sir.
Yes, sir.
Sir, yes.
Yes, sir.
Presentment. Two, first for acceptance. When I draw the instrument, you have to accept it. Only then it will become a valid instrument. Are you understanding? All right. So this will be called presentment for acceptance. First time. All right. Let's suppose I have drawn a bill of exchange. You have to make a payment of 10 lakh rupees to me. You have to accept also, no? I can draw thousands of bills of exchange to the entire world like this, but somebody has to accept it. Only then it will become a valid document. Are you understanding? Or else quit CA, start issuing bill of exchange. Nonsense. Somebody has to accept it, right? So the first time when you're presenting it for acceptance is called presentment for acceptance. Clear? Now, we have mentioned in the instrument that after 60 days, after 90 days, the instrument will be due for payment. Now, after 90 days, you will once again go ahead, present it to the party, asking him now give the money. First time, it was asking you, will you make the payment or not? It was ordering you. So first time when I issued the instrument to you, presentment for acceptance was that after 90 days, you will make the payment. After 90 days, when I present once again, it is for payment. Now you give the money. 90 days pehle, you had agreed. 90 days ke baad, now you make the payment. Clear? Two types of presentment. Presentment for acceptance, presentment for payment. Everybody understood the point?
Yes, sir.
Yes, sir.
Conceptually clear? Only then you will be able
Yes,
to
sir.
understand the rest of the points, or else you will not understand. Presentment, two types. First time when I'm drawing it, it is called as presentment for acceptance. Second time when I go ahead, ask you to make the payment, it's called as presentment for payment. Simple, nothing hyphen. All right. Now, what is important in exams when you're preparing, you have to know when is this presentment not necessary. All right. When is presentment not necessary? Let me quickly go there itself. The rest of the topics I will discuss. Hold on. All right, presentment is not necessary in the following situation where the other party is unnecessarily preventing you, all right, from presenting, where even though whether I present or not, you will still make the payment you have agreed. In that case, you have to make the payment. Do you remember we have discussed this, all right, where presentment is not necessary. Third situation, even though I didn't present, you've still made part payment. Why did you make the part payment? Because you know you have to make the payment. So now can you say in future for the balance amount, can you say he never presented, so I will not make the payment? Nonsense. Shut up and make the entire payment. Because why did you make the part payment then? Able to understand everyone? Yes. So these are the three scenarios where presentment for payment not necessary. First, where you are preventing me from presenting. Whenever I come, you're not there only for presentment. Somewhere there. Second situation where you are going ahead and promising that you will make the payment even though I don't present, you will make the payment. Notwithstanding means even though I don't make the, irrespective of the fact whether I present or not, you will make the payment. Third situation, part payment you've already done. In these situations, you cannot say that the presentment for payment has not been made. Not allowed as an excuse. Very important topic from examination perspective. Now, what are the smaller points? Let me quickly take you through those points as well. All right. Is the screen visible to everyone?
Yes, sir.
Yes, sir.
Yes. All right. So presentment of promissory note for site, whenever there is any presentment issued for promissory note or a promissory note for site, that means it is promising to make the payment only after site. If it is not seen, it will not be made it will not be payable. Second, 48 hours is what you can allow anyone to accept the instrument. More than 48 hours, if you've allowed somebody, all the previous parties will be released of their payment. Example, Lehari has gone ahead and issued a promissory note to me. All right, hold on. I'll take another example. Let's suppose Mehul has issued a bill of exchange to Lehari. Lehari has endorsed this to Sachi. What is the meaning of this? Sachi on the final date has to make the payment to me. Yes or no? Now, in this case, Sachi has only 48 hours to accept. Yes or no? I am saying, Lehari, it's okay. Give Sachi 72 hours. If I give more than the 48 hours, all the previous parties will be discharged of their liability. Nobody is going to be liable. Why did you give more than 48 hours? Who asked you to give more than 48 hours for somebody to accept? You cannot allow more than 48 hours to anyone to accept an instrument. Clear, everyone? If I allow, what will happen? All the previous parties will be discharged. They are not liable anymore. Are you understanding, Nagashri? All right. The next point. Presentment for payment, I've already discussed, and I've also spoken about situation where presentment will not be necessary. Presentment after site or after date, whenever any instrument is payable after date, that means whether I present or not, You have to make the payment after the date. That is presentment after date. Are you with me? Everyone understanding? All right. That is presentment after date. Next, presentment for promissory note payable by installments. Whenever it is an installment, then you will have to make the presentment accordingly. Let's suppose you will make the installment payments 10 times, then I will have to present it 10 times for the payment. Nothing high funda here. All right. Where time and place has not been mentioned for presentment, what should I do? All right. In that situation, it has to be presented at the place, at the space. If nothing has been mentioned, listen to me very carefully. A promissory note accepted payable at a specified site or and place and not elsewhere must, in order to charge any party, present it for payment at that place itself. Where I have specifically mentioned a specified place, you will have to present it only at that place. All right. If I don't specify any place, then it will be your business premises. Simple, nothing high funda. All right. Next, where presentment, where no exclusive place has been specified, then it will be your usual place of business or usual residence. Very obvious. All right. Where the presenter, when maker, has no known place of business or residence, where I don't even know your place and residence, where will I go ahead and present? Wherever you can be found, I will present it there. Simple. Understanding, everyone? All right. These are couple of pointers on presentment. Very simple pointers. All right. What is more important is presentment not necessary. And the last thing is rules of compensation. Now, what are rules of compensation? Rule 117, very, very critical. Sit straight and listen to me. Where in case of dishonor of any instrument, all right, how much is the compensation to be paid? What is to be done? Listen to me very carefully. Let's suppose Dhanush has issued an instrument, promissory note to me. He has dishonored it. Now, do you think I will keep quiet?
No.
Out of all, do you think I will keep quiet? Answer is no. All right. I will go ahead and file a case. He is going to make the payment after 3 months. Do you think for 3 months I will let the money be there? Answer is no. So in this entire thing, whatever expenditure I incur, let's suppose I have to pay the lawyers for noting. I have to pay the lawyers, notary for protest. So all those expenses are also I have incurred. I will recover it from Dhanush. Sir, he's made the payment after 3 months. Do you think I will keep quiet? Answer is no. I will charge him an interest also along with the principal amount. Now give me an interest also for whatever delay you've done. All of these are covered within the concept of rules of compensation. Section 100, Rule 170. Clear, everyone? Understood the point? All right. These are rules wherein compensation has been specifically spoken about. With this, we come to an end of Negotiable Instruments Act. I hope we have spent 1 hour quickly revise the topic called negotiable instrument. Guys, 2 chapters I've already covered. Bare minimum 25 marks you will get from these 2 chapters. Bare minimum at least 20 marks, 100% from these 2 chapters. Ensure you know word by word of these 2 chapters. Negotiable instruments is a very small chapter. Word by word, you should know what this chapter is all about. Am I clear, everyone with me? All right. So all my friends who are in there, how will they be watching it? God knows. I think there is YouTube live access given, right? Or YouTube access is being given. So anyway, I'm presuming that Shetty sir would have definitely thought of it. So there will be YouTube access if I'm not wrong. Nevertheless, with this, we wrap up negotiable instruments. Now I'm left with 2 chapters. One, which I've already finished, called Indian Regulatory Framework. During our classes itself, we have completed. I will revise this along with LLP. So I will finish LLP and then we will revise both the chapters once for all together. Clear? Everyone understood the point? All right. With this, I wrap up. Thank you so much, guys. Have a nice day.
Thank you,
Thank you,
sir.
sir.